Good evening, traders. Welcome to this session on Volume Insights with Killer Trader. Before we begin, a regulated disclaimer from my side. I'm not a registered analyst, and all the content of this webinar and explained later is only for your learning purposes. Financial markets are risky, so please consider consulting with a financial advisor before you make any investments in the markets. So, before we start off with the analysis for tomorrow's expiry, the Bank Nifty analysis for tomorrow's expiry, we'll have a quick look at what happened today. Of course, the day is done, but still it'll help you to understand these kind of days and also help you how to play these kind of days. Now, today, the major blow, the major issues that came for a trader was mainly from a Fin Nifty expiry perspective, where you can see that initially the markets were in a downtrend and then made an up move, which was rather strong. So the first thing that I always talk about, that I always stress, is the kind of opening and the structure that you get to see in the markets. Let me zoom in my screen a bit. So when I talk about today's structure in the markets, at the open, I was bearish. I was very bearish in the markets because of the flat opening and the large bar that we saw. There was an expected sell-off. Nifty was not that weak. Nifty was giving more of a range bound context from a volume profile perspective. But Fin Nifty, looking at the green bar, looking at the tape of Bank Nifty, made me understand that financial sector is a little weak at the open. So if you look at the volume profile structure of yesterday, it's a balanced profile. It's a neutral profile with a close at the end. So the thumb rule that I follow when the profile is a neutral profile is that I will always look to trade at pullbacks rather than chasing breakouts or breakdowns until the previous day's high and the previous day's low is not broken on either sides. I will rather look to trade pullbacks. That was the reason I was short at this point of time, and somewhere in the middle of this candle I had exited my shorts. By shorts I mean short calls, since on expiries I primarily focus on writing option. Today is Nifty expiry, so I packed up my short calls because it wasn't worth holding off for that penny risk for penny premium at this point of time. Now, a lot of traders getting into fresh shorts at this location would have been a very risky proposition, because when you see that the previous day's low is somewhere around 19,420 and market has been in case of a balanced profile, the market has been reverting, giving pullback opportunities the entire day. One should not focus on chasing these kind of uh, breakdowns from an option writer perspective. Say you are a buyer and you wanted to capitalize on the momentum of this particular day, then that is totally fine if you were short and you don't use order flow. Say at the end of this particular red bar or during this red bar you had entered shorts. But the one thumb rule that you always need to follow when you are taking a range expansion trade, this is a range expansion beyond previous day's low. When you are taking a short trade beyond range expansion at this point of time, your negation or your stop loss, basically the price point where you will accept that, all right, I'm wrong in this trade went wrong, I need to get out of this losing trade as fast as I can and look for reversals, is when price again goes back inside the previous day low range. Whenever you see a breakout failure at this time, you cannot know it is a breakout failure. 8 out of 10 times you cannot know. Twice you can use order flow in such fast moving markets. If order flow is available, well and good. If not, you cannot know that this is going to be a breakout failure. So even if you take a short position here, the moment when market comes back inside the previous day's range at this point, this should be the area where you should not look to again chase shorts, but rather look for long positions. Any questions about this? No questions? All right. So let's have a look at what Bank Nifty was doing today. Again, even in case of Bank Nifty, it was a breakdown failure and we closed at highs. Again, from a volume profile perspective, I don't see that my value area is extending all towards the highs, considering the kind of pullback that we got from the last 3 days. If you notice, we had a gap up opening, a pullback, and an up move, one more gap up opening, again a gap up opening, total 3 gap up openings. And today was a good day for sellers to try and control the markets, but they have failed. So this is giving us a seller's failure setup at this point of time from an expiry perspective for tomorrow. So in this kind of cases, the context and the structure at this point of time is indicating that there is a higher expectancy for the markets to move up. But at the same time, I don't see my value area uh, coming moving to the upside. Totally, it is still within the same range from the open where we traded. So at this point of time, this is going to be the area 43,890 to 43,880 to 43,900. This 20-point range, say tomorrow market opens flat and then starts coming down. This can be a good location. Again, since Bank Nifty is a very liquid instrument, I track order flow closely. This is where I would be looking at order flow for long opportunities. I would want to see demand coming in. I want to see the presence of big buyers coming in at this location who were long today, who managed to take prices up above today's intraday high. If that happens, this can give a very good long opportunity. But if you see that prices again getting accepted inside previous day's value area at this point, then just like today where we saw a failure of breakdown and an up move, there is a good possibility that tomorrow we can see a drive down again towards 43,700 area. Since there are still quite a lot of buyers who are present, good amount of buying happened in this location. So if price again comes back inside this zone, then this can turn out to be a weak day with a bit of a sideways context. If we open with a gap up, then there is a good chance, there is a high chance that we can see an up move, because all the remaining sellers who are still present today, considering tomorrow is expiry, they would need to cover their positions. But that's not a kind of a gap up. If you see a gap up, that is not something I would like to chase, because from a risk reward perspective, for me to write options or even to go long options at that point of time, you would need to be really, really careful and time your entries. Because if you open with a 300 point or 200 point gap up above, then there's not going to be a good area for you to place your stop loss at that point of time. So right now, then we would need to wait for some time for the markets to establish ranges from an intraday perspective to identify good locations to pick trading opportunities. Now, when I look at the order flow for today, again, when I look at things from an order flow perspective, this is a location. This was a good location where you see this 1300 lot order. This was a uh, passive buyer who had stepped in. Again, as we discussed in the previous webinar, just because a stopping buyer or a passive buyer is stepping in does not mean that the reversal should be instant. It doesn't mean that just because a buyer came here, markets will move up or reverse immediately. Someone who has enough capacity, who has enough juice to trade with a 1300 lot order at this point of time, it need not always be necessary that he will not be able to defend 30-40 point moves. Even if the market moves 50 to 60 points below his buying location, he would have enough capacity to absorb, which is what happened. So the moment you see orders like this coming into the markets and you see a down bar, if you are still in a short, that's totally fine. But the moment you see this green bar coming, which indicates that this passive buyer is now trying to initiate and uh, defend the down move, this should be a cue to exit any open short positions, any open that a trader has at this point of time. Again, you see at this point of time a large order coming in. Even this candle showed good amount of selling volumes. When you see that these kind of bars are being repeatedly taken off, even if you don't see a lot of activity in the current bars from an order flow perspective, in this bar there is a lot of activity. In this, I'll come to that later. Even if you don't see a lot of activity in those cases, you need to logically understand that This was a good price location where a large seller had stepped in. Now if price is moving above that, it means that this seller is not interested to defend, or he will be forced to cover. If you see these two bars, I'm seeing a lot of imbalances here. I'm seeing a lot of imbalances here. This indicates fresh market buying into the markets at this point of time. So these are the kind of things that you need to understand and keep in mind. It will not be a good idea to have a mind bias and work with only one single direction just because we saw this kind of action. This action was for the first half, but this is where the game started changing, and this is where the buyer started showing their hands. Since we have almost everyday expiry now for most of the month and for various indices, and each index has a considerable overlap in the constituents with other index, so more or less similar positions would be built. And you can see that cascading effect, you can see the effect tumbling down, because bank nifty moving up in this case would also have lifted financials, the fin nifty to a certain extent, and those riders would be forced to cover up because their settlement, the positions that they have, are going to expire today. So these are some of the pointers that you need to keep in mind when you are trading daily expiry situations, which is the new normal since the last few months now, and it does not work well. This was again a question that I got, if one can have a very ironclad or a rigid process that they can follow day in out. Sure, you can have a process that in your mind that you all right, what am I looking at in the markets, what am I understanding, that's fine. But market itself is very dynamic. You need to have broader points on from a knowledge perspective. You need to be able to identify structures, you need to be able to identify where is supply and demand coming in, but every day is actually different. If you simply think that it's all it takes is for me to have one particular analytical aspect, be it even for example order flow, and just work on it on an isolated basis. No, it doesn't work like that. As and when the markets are flipping, for example today, you need to literally be on your toes and know what you are looking for. For example, I look at imbalances like this and passive orders to the lows that I had showed you a few minutes back. After a down move, came, and then passive orders came, a passive buyer came, and he was lifting the markets up. So these are the kind of things that I look at, and never have a strong bias that if the market opens in a direction and starts moving in a direction, that direction is going to sustain till 3:30. Any questions? Any view on anchored view of volume profile which is available on uh, trading view? See, anchored VWAP is different. Again, anchored volume profile is different. We have anchored VWAP here. All you need to do is plot custom VWAP. It's loading. You can see that this is your custom anchored VWAP from the starting point that you use. An alternative for using anchored volume profile is your custom range volume profile. Again, you can choose the starting point and choose the ending point and look at the value areas. See, if I have to, Keshav, you asked about passive buyers and passive sellers. If you have to understand about where is a passive buyer and where is a sell order, you need to first understand the entire order flow itself. You need to understand what kinds of orders are shown on the bid side and what kind of orders are shown on the ask side. For example, on bid side, you get to see uh, market sell orders and passive buy orders. On ask side, you get to see market buy orders and passive sell orders. And when you match these orders one up diagonally, because that's how the order matching is done, then you get to understand that from a relative perspective what kind of orders are coming in. Because if you look at these two bars, most of the orders, 95% of the orders in these bars are in triple digits, say 300, 200, 400, more or less. the same kinds of volumes coming in with the volumes being higher on the bid side. This tells you that market sellers are active. Then all of a sudden a 1300 lot order comes in, which is not relatable to the numbers that are presented, that you see on the tape earlier, and then the market begins to move up. So from this you understand, again a 1200 lot order here, you understand that this is a passive buyer. But again, just because a passive buyer that comes in doesn't mean that the markets will reverse. That should be your first cue to exit. The moment you see price action like the entire area sustaining, that should be your cue to exit, because this buyer is absorbing all the sell orders that are coming into the markets. He is now looking to control the markets away from the sellers. I hope that answers your question. And what is zero showing in order flow? When you see a zero in order flow, that indicates that there were no orders that were fulfilled there. Zero at the top or end of a bar, and when you look at the market structure like previous day high or previous day's low, can show a failure. But in the middle of the bar this way, if I see that there are zeros on my ask side, or 7 6 small numbers like this shows me that on the ask side my buyers are failing to take control of the markets at this point of time, and the sellers are actually uh, pushing the markets down without much defense from the buyers. Again, at this point you see 0 17 35, all of these are relatively smaller numbers, especially the zeros in the middle of the bars. So where you see the zeros matters, whether it's at the top of the bar or bottom of the bar or in the middle of the bar. Anyone else, any other questions? By any chance we get recording of today's session? Yeah, sure. You will be getting a recording, and this is not a free indicator. This is a paid software. Order flow settings, for Bank Nifty, I am right now using a setting of 100, and for Nifty it's 60. These are my own personal preferable settings based on the absolute value of Bank Nifty. For example, if Bank Nifty goes above 55,000, I'll change it. If Nifty says comes below 14,000 for 15,000, then I'll be changing it. But the standard settings that you can use is using ATR of instrument. Again, this is something that I had discussed a couple of times in the past webinars. The recordings are available on the YouTube channel, so please go ahead. Please check it once, and you will understand. So whenever the market is in a range, or when markets are moving up and down, one important reference that you can use, again this is a handy tip for you, don't you need not use it if on an everyday basis, is your PVWAP location, that is your previous day's VWAP from a closing perspective. In this case it is extended to my current day. You see this, let me zoom in. So this is my previous day's VWAP area. You see initially how price easily broke down through it. That tells you what exactly does VWAP tell you. The previous day's VWAP tells you the volume weighted average price, the fair value of where the instrument was trading on the previous day. So when price broke down through it, you can see good amount of sellers activity moving down again, because PVWAP is already an established indicator. You can use it. PVWAP is an established value. So you see price struggling in the same location before it gave another drive down. When you see that when price is holding up above it in case of reversals, then you should never attempt trend side trades of that particular day. You can have a reference, since most of the reversals you see happen within the range, within the previous day's range on many days. You can see this, for example. Again, this was your previous day's VWAP at closing. For 30th, this was your previous day's VWAP. When price broke down through it, you got a good down move. Again, this is where you could see a lot of struggle from a price perspective. This is where you could see price entering into a sideways move. That is These sellers who sold at open were trying to defend, but buyers came in and you could see a move, upside move once price successfully broke out through your previous day VWAP. So this is a very handy reference for pullback trades that use. Which software provides you with order flow tools is a question that I got. Quantover is a software that provides you with order flow. This is something that we are using at this moment. So if you see more details about the software, the payment plans and everything will be shared by Vidhi at the end of the webinar. ATR is your average true range. Srinivasan, I did not get your question. Shiva, I explained that some time back. Why market fell in the middle? Explain with these volume indicators. What do you mean market fell in the middle? I did not actually get your question completely. So please explain again. Please explain today's market with volume profile. I explained Fin Nifty at the beginning. Uh, from this software, can we find gamma blast moment? Gamma blast depends on the structure and the data that you are looking at. It does using volume profile, using order flow will help you understand market structure. Where can you expect larger move? Where can you expect a smaller move or a range bound market? That including a basic understanding of Greeks. You need to have a basic understanding of Greeks to understand, to look at it. Is 44,000 is a good resistance as you shared on the tweet? Yes, from a short-term perspective, 44,000 is still a good resistance. If we open with a gap up above that, as I said, on a short-term basis, the markets are in an uptrend. This was something that I shared last week as well at the end of the down move when we were reversing. I said that the structure is to the upside, but until today, there was no decent intraday opportunity to take a long position because every day the markets opened up, came down, and came up. And the next day on third, it was a sideways day. So today was one of those days where we got a good move with momentum on the long side for a trader to pick it up. I mean, after 12:15, do time cycles decide the move? No, I don't follow time cycles. How to find buy or sell order if 12,000 lot come? No, numbers don't work that way. If you look at 12,000 or 5,000, that is not the way to look at, because it depends on instrument to instrument for you. Anyone else? Any other questions? Order flow works on every liquid instrument, Keshav, Nifty, Bank Nifty, and stocks as well. All right. If you don't have any further questions, then we'll conclude here for today. But before we end, uh, as most of you know, but the new ones don't know, I conduct a mentoring program solely for volume profile and order flow with over 18 to 20 hours of content. You will be learning about volume analysis, order flow, getting access to my proprietary tools in the mentoring program as well. So interested ones can send me a message. I'll be sharing the details of my Telegram so that you can message me. If you have any further questions about the software, Vidhi will take over here.
Thank you, everyone. Thank you, Katie, for such valuable session always. And any queries you have related to Katie or anything you want to know more, you can always contact him directly on his Telegram channel. And any queries related to Quantover, I am sharing you both the WhatsApp chat support number of ours and Telegram channel handle of Katie on chat. So you can contact us.
I have shared my Telegram ID in the chat section, so
Yeah.
please check it out. Thank you all. Thank you, Vidhi.
Yeah, thank you
Have a
very
good
much.
day.
Yeah.